Hi, and welcome to Business Vision with Evolution Advisors. Today we have Darren Glover, a director of Evolution Advisors, who has over 20 years' experience as a chartered accountant, business strategist, and business owner. Today we're going to be speaking about wealth, how to protect it, and how to make it. Darren, thanks for joining us again.
Yeah, pleasure, Chris.
So, since the global financial crisis, many Australians have become disillusioned with investments, and in particular those who are about to retire or have retired have watched their superannuation drop. So, what would you say? What have we learned from all of this sort of struggle that we're encountering right now?
I think one of the biggest things we can take out of the recent times and the GFC is that as we're nearing retirement age and we're relatively comfortable with the amount of superannuation that we've accumulated over our working life, we need to look at managing our risk a little better. And I think the problem was leading up to the GFC is that we thought that the good times were just going to keep on rolling, and we were happy to have most of our retirement savings in the more risky assets such as shares. And I think what we need to learn from that is that the closer we get to retirement, let's wind back the risk and let's manage our investments a little more carefully. The other thing we can do is look at implementing strategies. And one of the strategies that could be looked at is just ensuring that you have some cash in your retirement savings allocation, and that cash should be probably around the vicinity of 3 to 5 years worth of income once in retirement. And if you've got cash or near cash investments that will last for 3 to 5 years, if something like a GFC were to occur, then you have 3 to 5 years before you need to worry about disposing of or liquidating any of your growth investments. And the problem many people found when the GFC hit is that they had to liquidate growth investments at the wrong time when prices were down. So look at managing risk and look at developing strategies to deal with things such as GFC coming along.
So Darren, what do you see as more important, immediate or long-term investments?
At Evolution, we'd always encourage a long-term outlook in terms of your investment strategy. You need to be looking longer term. I think a short-term approach to investment is probably, well, obviously it's short-sighted, and I think you're going to be more reactive to short-term fluctuations in the market. You need to understand your own personal risk profile and invest accordingly, and also understand the needs you're going to have in line with your investment strategy. And if you have an immediate need for cash, then your investment strategy should cater for that and be invested in assets that are going to provide you with a cash return when you need it.
And modern society seems to become addicted to growth. Do you see markets returning to the unprecedented growth we've enjoyed in the past?
Look, that's really hard to say whether they will. Growth is likely to come back into the markets, and it appears as though it's starting to come back into the markets over the last 6 or 12 months. But I think, reiterating what I said earlier, it's important not to have, I guess, a blind expectation that growth is going to continue to occur. It's important to stay on top of your investments, to manage them carefully, and also to seek some professional advice, I think, if you're not an expert in managing your investments. And if you allow someone to assist you, it should allow you to make better decisions for a better financial future.
Well, Darren, it's great to have you on the program once again. As always, a wealth of information coming from you and your organization. Thanks very much for joining and helping our audience out.
That's a pleasure.
We've been speaking with Darren Glover. He is the director of Evolution Advisors. Check out their website at evolutionadvisors.com.au. Thank you, everyone, for watching, and we'll see you again real soon.